Maximus Analysis here for June 27, 2016, and we can see that we're continuing to sell after the Brexit news, and they're coming to test some previous levels. Again, they broke below 2,000. They're at 1983.25. I didn't post levels for the past day because of how quickly things are moving. I wanted to make sure that they're relevant, but we'll continue to watch and again see how much strength they have going into that. So this is the ES on the weekly, and let's look at the daily, and you can see that they slice through the 200-day pretty quickly, and now they are, the last level I see is this 1944 area. Again, they're testing the 1978 area, but we've talked about that. They blew through that before, and now we have to just see where they're going to go, because this is good follow through for the day, and they're closing near the low. So again, we want to see if they're going to gap down or what they're going to do going into tomorrow. Again, you do not have to be a hero and buy this. You got to make sure that when you quantify the word dip, that you are kind of looking to the left as well. So again, maybe this is a dip, this is a dip, this would even be considered a dip right here, okay? And if you look at the price action before, you can see that sometimes these dips mirror each other, but when they break past a certain point, it's not supposed to be equated to just buy the dip. And again, what I put on a newsletter, again, if you don't have it, please email me at maximusanalysis@gmail.com, and I will send you a free copy of this and some past weeks, so you see that I'm not BSing you. What you also want to see is that how many weeks back did they break? So again, looking again on the weekly chart, you can see they've broken about 8 weeks back worth of information. So again, you're going back to early March, and they're below that. Okay, they're breaking. Now, you might say, oh, they might close above it. Yes, but it's still a significant break of about 3 months worth of price action, and that should not be ignored. Going to the monthly, you could see that this is a bearish engulfing pattern. So far, and the month will close on Thursday. Okay, so this is a significant pattern that they need to shape it up very quickly, because they are going to test this level here. And if you look straight down, it's around 1914 on the monthly, but you can see that this level is 1, 2, 3, 4. This will be the 5th time they will potentially test this level, and I think if they close below this on a monthly chart, that we have now entered into a full bear market. Again, we're sideways, painfully sideways on this chart, but you could see that if they break below this 1800 level, again, this is the same thing posted to the newsletter subscribers. Again, it's 1575 that I see based on these lows. So there's a lot of air. There's 200 points worth of air between these two marks, and we will not discount that at all. You have the NQ. Again, same type of deal, but this one is actually a little bit worse because they didn't come near these highs. So you can see that they had the lower high, and they're breaking these lows, and they need to recapture something very quickly, or they can come back again to this 4,000 level, and below that you have 3875. So again, do not be a hero. You don't have to chase either, and if you miss the move, that's fine, but I'd rather you miss the move than get late and get squeezed out for no particular reason. You have the YM now under the 17,000 level, and you can see that again, these are levels that we've been posting for months, and I won't stop posting what I see. Okay, everybody else will say, okay, we have to see what's going on here. So let's look here of something very simple. So again, I haven't done midpoints in a long time, but the midpoint to this last swing is 16,750. That's coming very, very quickly in a matter of 200 points when the market is moving 600 to 200 points a day. Again, today it was down 260 points, so this can happen very quickly. Then it's the 200-day moving average, which has held numerous times, but if it gets tested, we're coming back to these previous levels. So just be cautious, and we'll take it day by day, but don't be a hero for no reason. Again, there's no reason for you to have to do that. The the CL is at a pivotal point right here, and I'm actually going to roll my stop to break even, because it's been very bipolar in regards to how the price action is moved, and I'll show you why if we look at the CL on the daily time frame. So we're testing this previous this previous support area that we have here. Okay, we came down, and if I showed you, I think I put this on one of my charts, I'll show you exactly what we have going on here. We have the rising wedge with a lower high from this gap, so you got some separations, retracement. They need to hold this level, or they're going to go back and at least test that 42 level. So, and if they break that again, you know, you really don't want them to break below 40. So we'll continue to see how it is. I want to put my stop at break even because crude can be just that wild sometimes, and go from there. Again, I'm taking a little bit more time than I usually do on the overall picture and macro view of the markets, because I don't want, there's a reason why I always start with this for the last 500 videos. I start with the indexes, oil, and then sometimes even going to gold, because I want you to see the big picture of things versus just looking at 3 months worth of data. It's very important to see the big picture. So out of all the names that I see, again, you have Apple continuing its down move. Again, I'm not looking at this for any long setups right now. It's just not giving me anything. You also have Amazon down 7.5, but it's coming to this previous level support. Kind of choppy. We don't like this. We don't like it to do. We want it to do something, the price action to do something like this. We want it to come up, come down, come up, but come down to this previous level right here, right? We want the previous level right there. We don't want it to come through and then do something like this and then potentially like that. So we will continue to watch how this pop, if there is any, manifests itself, because right now you just have an indecision day, and we have to continue to watch where these things are going. You had price line was down about 70 bucks, but ended closing up 40, down 46, but it still has fallen off a cliff. And this is kind of what I showed. Again, we had, if you look on the weekly time frame, you had 3 bearish candlestick patterns, and if you watch candlestick patterns, you can see that it had bearish engulfing, shooting star, and it had another bearish engulfing right here, which is actually engulfing about 6 weeks worth of price action. So again, this candle is open, so don't think like, oh, this is the dip to buy. You have 3 bearish candles out of 8 weeks. The first target will be underneath this 200 moving average, and the second target is around this 825 if it really spills. So we'll continue to watch that price action. The one that was up, which was weird, was Tesla was up today about $5. Again, they're holding this previous level. Again, I haven't, oh boy, what the hell did I just do? All right, got it back up. Sorry about that. This level that we've been showing for the last couple of weeks, and this is like its do or die level right now. It needs to hold this level. Again, this is such a choppy pattern right here, sideways. But again, if it's going to hold the level to go long, this is where it needs to be. If it breaks below this level, they're coming back, and I would say they'll come back to this 14.5, or even, especially at least the 120 area. So we'll continue to see where this week closes, but it's been a pretty hairy week. And again, you can keep your powder dry. You could keep your powder dry. You do not have to catch every move. Okay, if you miss this move, that is fine. Do not beat up yourself. There will be another opportunity, but the last thing you want to do is sell short here, and they just pop it to here. Again, it doesn't take much to squeeze out people that chase. They pop it right here. A lot of people will put their stop right above this. They pop it right here or right here. And again, they could pop it there and still go down and break this. But because you don't want to be patient, you could either do one or two things. You could go to aggressive time frame, 60, 30 minute, 120 minute, or you go to weekly and you just have to wait. Or you could say, you know what, I'm going to trade the monthly, but then you're going to have to look at an option about 6 months out, and you're waiting for the close of this candle, which could still pay very well. So let's not take that into discount this time frame. Some people are like, oh, I don't want this time frame. Well, guess what? Ain't no noise on this time frame. I'll tell you that. And that's a great thing about sometimes trading these time frames. So again, keep your powder dry. Please, 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 if you do not have the newsletter, shoot me an email. Okay, I've been putting this stuff out to subscribers. Not even subscribers, people that just say like, I want to get your free email, get your free newsletter. They've been getting some really quality information, and if they didn't, that's fine. But you know, just really working and making sure that these things are working out properly and having price levels. And it's a little bit more in depth than just what's going on in the daily time frames. And I will add in the picks as well. Stock picks will start adding, but I want to make sure, again, the macro level is looked at, because a lot of people will give you picks every day and they're BS. The options are crap. The spreads are crap. They're just doing a basic scan of breakouts, breakdowns, and they're not looking at the overall price action. So that's what I want to make sure you guys are looking at. So again, shoot me an email at MaximusAnalysis@gmail.com, and we'll see what they do tomorrow. Take care.